here's a question for you, Avi. On the Velo chart, so let's go to velo.xyz/futures/BTC. So let's look at Bitcoin. I would have, I was wrong about something, and I want to own up to it. I thought that we were out of the leverage woods when Bitcoin was on the highs, and I was wrong. Like, I think there was a little bit too much leverage in the market when Bitcoin was trading above 110, which obviously unwound. And the way that I judged that was I looked at the BTC funding rate, right? And I sort of looked over a 3 to 6 month timeline. So let me put 6 months in here. What crazy funding is what you see. Actually, let's go a little further back. Let's go to a year. Crazy funding is what you saw around the election when, like, forget Hyperliquid, maybe when Bybit funding was 42%, when people were just like seeing green, they could without really thinking. And I was like, oh, well, we're trading 112 and, like the funding rates are only, okay, Bybit's 8.4%, OKX is 3.5%, Binance is 3.5%. These funding rates aren't crazy. I guess the market's not too levered. What was I missing? Because obviously leverage has come off.
So this is actually quite simple. Notice how we'll go to the bottom, right, of the Bitcoin chart where it bottomed out. I'm on the 12-hour chart here. So bottoms out at 74K. We have 173,000. Let's call it 170,000 in aggregated open interest. This is counting on Bitcoin in Bitcoin terms
Across all exchanges.
From across all exchanges. From there, all the way to May, we added about 15,000 coins. At the peak, we added 36, but then you see how this comes off really quickly.
Yeah.
So even to the peak, we only added 36,000 coins. And remember, prices are lower. So you see how open interest doesn't really go up a ton here. Yes, obviously it goes up, and there are some spikes that immediately get sold back down into, but open interest doesn't go crazy.
Yeah.
Now, go now to 18th of May. Bitcoin price goes up from 102,000 to 111,000. It's only $9,000. It's a 9% move. The move before, 40% move. So for a 40% move, you get 15,000 coins added in OI. For a 9% move, you get 40,000 coins added in leverage. It's all about the ratio. You basically take the number of coins and you divide it by the price movement. And if that ratio is like 2 or 3, then you're in a danger zone. Like, you're like, okay, I don't know how sustainable this move is going to be. Now, look, immediately Bitcoin loses it. And this is key, by the way. So Bitcoin goes sideways, loses its momentum, and open interest stays flat. That means nobody is now willing to add to their positions. There are no more buyers.
Funding is just eating their money.
The guys that add all of this leverage are generally the last buyers of a rally, right? They're the guys that are like, I didn't make enough money from here to here. I'm going to make all my money in this tiny little section over here.
Yeah.
So they go crazy. Now, then it goes, once it starts going sideways, all right, I got to get the fuck out, because these guys are going to have to come off at some point. And look, that's what it does. And to be fair, this isn't, it's not a huge move. It's a 7% move. But so I'm not saying, oh, you have to short every time this happens. I'm just saying, maybe lighten up, maybe don't buy. You see this, maybe you're not buying.
Yep. No, that's
you see that, you probably don't want to buy a ton in that area where that happened. You want to wait a little bit for it to come off. You can short. I think there are ways to tactically short, and generally my rule of thumb is I don't buy until all of this goes away. So I'm not buying until we get back down, to here, basically
190.
We need like another 10, another 10,000 13,000 coins come off. Maybe that takes us down here to 97. And then if we're at 97 and all of that is down, then I'm buying a fuck ton of alts. right? So
That
this is
is
a little bit of how I think about it.
that is a
I hope
very,
that was
very
helpful.
clear and very helpful representation of how you look at this. That's awesome. Thank you. So, okay. So basically, yeah, all right. I guess my mistake was I was too focused on funding rates and not looking at open interest enough.
And actually, we can go back and look at the funding rates. The issue with funding rates is that you often look at them over time, but what matters are the spikes. So
Yep.
let's see if I can. I'm gonna go back and share.
Can you
So
share? Is
it's
it
a good
possible for
point.
you to share your? Yeah, let me here add it to the stage. Is it possible for you to share your Velo screener, like just the way that this? I think maybe our community in the Niger Delta Avengers chat would appreciate
It's
having.
very it's very easy. You go to indicators and you just click open interest and aggregated funding and just like aggregated. There are all
I
sorts of
see.
other amazing things here. Uh, Basically, anything with Velo in front of it is specifically Velo. Anything below
Oh, you're
here is
doing
sort
this
of
in
spun your
Trading
own.
View.
So this Velo has TradingView integrated.
Yeah, I use their web app, but yeah, fair enough.
So you see how you get these funding spikes here. You
Yeah,
don't. That's not great either. Um, yeah,
I
you
just thought that
you don't
funding
really
spike was
want to
so
see these
minimal
massive
compared to what we
funding
saw during
spikes
the
because
election that I kind of dismissed it, but I shouldn't have.
it's minimal, but it's also because there's a lot of money in the markets arbing out these funding rates. So the
Yeah,
funding rates they don't get elevated for a very long time. So what is the point of a funding rate spike then? Like, why do I care about a funding rate spike? The funding rate spike tells me that I'm not just imagining that this open interest is long,
yep,
right? Because open interest, obviously, you can go, you can go, it has to go both ways, right? Like for every long, there is a short. But generally, what's happening is that market makers are offsetting one of the sides, right?
yep,
So it's the takers that really matter. So when you see open interest go up a lot and then, okay, funding rate has spiked, that means that open interest is going up in all likelihood because there are aggressive takers buying, getting long positions, and then there are market makers that are taking the short side and then hedging out the risk.
yep.
So net, you still end up reasonably long, right? So that's why the funding rate spikes are important. I don't actually use funding at all anymore, except to confirm direction of open interest. Otherwise, it just doesn't really make sense to use because of all the people that are orbing it. There's so
Yeah.
many people that are just taking that'll just take it back to neutral for free money.
No, that's a great point.
Because really, like all it requires is a balance sheet. You can do it all day. It just requires a balance sheet. And there are enough people here that have a balance sheet. The reason that a guy with $2 million isn't doing it because if they take $1 million position, they can get liquidated.
Yeah.
You know, but you take a $500 million position, arbing out funding rates across a bunch of different instruments, and you have 1.5 billion on your balance sheet, and you have a relationship with the exchange, and they're not going to liquidate you without allowing you to top up more capital, which happens a lot more than you think. Then you can do this all day.
One interesting phenomenon is that those funding rates are where they are because of interest rates in general, right? Like, let's say that the Fed reduced the short-term borrowing rate from wherever it is now, 4-ish% to 0. Those funding rates would come in a lot. They'd go down because TradFi institutions like my former employer, as well as its competitors, they borrow capital to do this trade. Or even if they don't borrow capital and they're just sitting on a bunch of partner capital, they have to evaluate the opportunity cost of deploying capital into crypto basis versus the other opportunities they have on the table, which are plentiful. So there's sort of like a internal funding threshold below which you don't go for opportunities and above which opportunities start to look interesting. So, if you can earn 4% on T-bills or 4.1% on T-bills, you're not going to try to earn you're not going to try to earn 3.5% doing a Bitcoin basis trade on Binance, because that's inherently much, much, much riskier than doing a T-bill. But you would go for a 20% arbitrage on Binance after the election. So basically, that speaks to your point about the funding spikes being short-lived, and it also gives you a sense of like where where the general TradFi, like deep pocketed crypto basis arbitrage crowd has their break even. Like it was part of our spreadsheet at Cumberland. We would literally be like, oh, okay, like money costs us 10%. So we're not going to go for opportunities that are less than 10%. And that 10% cost, I'm just, making up a number here. It was obviously different than that, but that 10% cost included the risk-free rate as well as the opportunity cost of other opportunities, as well as like capital constraints within the firm, et cetera, et cetera. So it was very, it was a moving target, but it was there. And so maybe that's why funding doesn't spike for very long, because all those people have like powder in the gun, ready to do their basis arbs when funding spikes too much. So I take your point about funding being a good like bleeding edge indicator, and then open interest really telling you when people are over their skis or not.
100%. Okay. I think that was fun. That was the first time I did a screen share and taught you guys something about how to trade. So I
Let's
hope you
do
guys
more
enjoyed
of that.
it.
I did.
We'll do more of that in the future. Maybe we'll give a few lessons in the future about how I think about trading.
Masterclass.
Yeah, Jonah, this was awesome.
This is great. Unexpectedly busy episode. Great talking to you, Avi, as always.
Yeah, this was a pleasure, Jonah. All right.
See you next week.
Talk soon. Take care.
Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.